Now let's move on and give you some business news on the programme. And Asian shares are steadying and even rising, in fact, from early losses as investors place their hopes on a coordinated global monetary policy response, in fact, to the damaging economic impact of the coronavirus epidemic. That after markets were really pushed off rather a precipice last week with more than $5 trillion wiped off global share value. Bargain buyers moving in then hoping to cash in. Let's bring up the markets for you if we can. I'm not sure if we can, actually. We may have a slight technical problem with the markets there. Instead, let's cross to Bangkok. We're going to speak to head market strategist. The other markets for you, as you can see, all in positive territory, over 3% there on the Shanghai Composite. Let's cross to Bangkok. We're going to speak to head market strategist for Asia Pacific at Axitrader. That's Stephen Innes, of course. Stephen, good to have you with us as ever. After last week's, these slight rises inevitable, perhaps?
It was quite a free fall we had last week, Stuart, and I think we're seeing traders come up for a little bit of air today. I think the expectations were for more of a sell-off today, but some data came out of China. It was a little bit better. Low, the PMIs came out lower. The Caixin PMIs came out lower. There was elements of that within the data that was actually quite supportive, especially the forward-looking components, where optimism was at a 5-year high. This seemed to buttress sentiment, and a lot of short covering came in. We're not out of the woods, but at least for today anyway, things are looking a little bit better.
Yeah, Stephen, let's talk a little bit more about those figures coming out, that Chinese factory activity. I mean, the monthly purchasers managers index, it actually fell, didn't it, to 40.3 from January's 51.1. Let's remind our viewers on a 100% scale, it means that numbers below 50 show a contraction. I mean, it's quite an incredible contraction, really, isn't it?
It really is, but can you believe that was better than what the markets were expecting this morning? This is the thing. We had the national PMIs getting released over the weekend that were down at 35, and the markets were very worried. Coming out at 40 was better. But again, there's a third level within that survey that points to a forward-looking element, and manufacturers were actually looking pent up going through the year. In other words, they're looking to rev up their situation again. So when people come back to work, the thought is production starts to go up. And I think this is why we're seeing the Chinese markets especially react more favorably.
And are there really hopes, Stephen, for some kind of coordinated effort to try and mitigate the effects of coronavirus?
Yeah, I think the monetary policy taps are going to turn on. I think that's the first level of defense. I think what really is needed is more of a concerted effort from governments also to come through with the fiscal stimulus. We've seen that happen in Asia. We've seen it happen in Singapore. We've seen it happen in Malaysia. And of course in Hong Kong, where they actually put money in people's bank accounts, was a very good measure, really boosted confidence. We've been disappointed in the past by Europe, but we've also been disappointed in the past by other countries. So I'm not as optimistic on that front, but at least we've got our fingers crossed that some fiscal policy may happen.
Stephen, thanks very much. Stephen Innes joining us there from Bangkok from Axitrader. Now, here in France, the government has been meeting with union leaders. This time, though, for once, not about strikes over pension reform, but rather the measures that companies should actually take to halt the spread of the new coronavirus. Claire Rush takes a closer look at the precautions that employers and employees are taking in the workplace.
It's become a must at this Paris office building, sanitizing one's hands upon entry. A precaution taken by this tech company to stop the new coronavirus from spreading, as is working from home. This software developer is in quarantine after visiting Milan. Other French companies are taking things a step further. This optician has barred his 20 employees from going on business trips in areas affected by the virus.
We're on standby. Our plane tickets and other bookings are too. We're waiting to see when we can travel again.
A measure that's also been adopted by France's economic heavyweights, Société Générale, Total, Danone, and L'Oréal. In the public sector, national rail operator SNCF is particularly vulnerable to the outbreak. The coronavirus comes on top of massive losses due to public transport strikes in December, a whopping 800 million euros in net losses for 2019. Despite being tens of billions of euros in debt, SNCF says its priority is to keep services running.
We've provided ticket inspectors with masks so that they can protect themselves and also give them to passengers showing potential symptoms. If a passenger is symptomatic, we'll take down every surrounding passenger's name so as to help manage this crisis.
SNCF is focusing its prevention efforts near the Italian border.